Good afternoon, everybody. Give it a second for everybody to come filter in. See everyone coming and joining. Fantastic. Well, welcome everybody. Today is going to be a fairly relaxed session. We wanted to do AMA and Ask Me Anything to talk a bit about this new idea of revenue tokens that Fusang has. While everybody comes and filters in, I'm hoping that this will be a bit of an interactive session. We're running this as a webinar so that we can take a couple more people. But if you guys have questions, please just type them in the chat. Ideally select all participants so that everyone else can see the questions that you type as well. And if you would like, please also raise your virtual hand and I will pull you, or one of the team is going to pull you up live on the call and we can actually run this as a real chat. Because the idea today is for us to talk a bit about some of these concepts that we have, but we're also very interested in getting feedback from all of you. This is a very small group of people that we've got here today. All of you are issuers or people of a similar nature who we've been in touch with in the past about creating a digital issuance of some kind, creating a security token. I think all of you we've been in touch with in the past because at some level, the idea of having a blockchain-based token representing something real, equities, debt, funds in some way resonates with you. You know, I've long believed that the idea of tokenization makes a lot of sense. And certainly the huge interest that we see in the crypto markets today just goes to show how much interest there is in tokens of various forms. But I've always believed that there is still room for equities, debt, funds, and other kinds of securities, and that notwithstanding how much heat and interest there have been in the ICO and NFT markets, that there is still room for capital markets to do what they were always supposed to do, allow companies to fundraise so that they can pay for projects and ideas that they have, and allow investors to invest into those companies and get a productive return. Now, as much as there has been interest in these alternative models of things like ICOs, as much as people have been interested in building communities and etc., I think there's still something fundamental to be said for the idea of just fundraising as a company and saying, you know what, I've got an idea. I need money to help build my idea, my project, my company, and I'm looking for investors to help do that. And again, I think a lot of us have been in touch in the past because that idea resonates with you. You say, ICO is a little scammy, but doing a traditional listing on a traditional stock exchange is also rather too hard. And let's look instead at creating a security token of some form. But the reason why we've come up with this idea of revenue tokens is that a lot of issuers have still been telling us that going and doing a full IPO process is still too difficult. Fusang, for example, we are going through a full-fledged IPO process for ourselves, submitting prospectus, getting it listed and traded on exchange. And I honestly think that there are still a lot of benefits to both creating company equity tokens, and being able to offer that to the public in a full-fledged IPO. But even for Fusang ourselves, as highly committed and we hope knowledgeable actors, it's taken us a couple of months to put together our IPO, to talk to lawyers and auditors and go through the many iterations that we've gone through in terms of drafting the prospectus. And at long last, we hope we're almost at the finish line. But this entire process has made us realize that it will cut out a lot of issuers who, again, as I said, they just want to fundraise. They want to find ways to be able to get matched with investors. They are more than willing to give up real security interests in return, but they don't want to have to quite go through the enormous amounts of paperwork that are involved in something like an IPO process in terms of actually selling equity. So I'm just looking at the attendees we have. Wow, I think we've got like 90% attendance, which is pretty amazing. So let me talk a bit very briefly in terms of how we are starting to think about these revenue tokens and where we're at today. But as they said, please feel free to raise your virtual hand and come on camera and chat. Or if you're shy, just type your questions in the chat at any point, because hopefully this will be fairly interactive. But to talk about revenue tokens, again, we've been thinking very hard in Team Fusang about how do we create an instrument that will allow companies, issuers as we call it, to fundraise from a global investor base, but cutting out a lot of the operational heft and paperwork that comes with doing something like an equity offering. If you are a company today and you want to sell shares, even if you're not looking at selling shares publicly, let's say you're looking at putting together a private offering, there's still a lot of parties you need to talk to. And as easy and as digital as Fusang has tried to make it, issuers come to us and say, hey, can I list my company shares? And we say, great, show me your offering documents. And they say, I don't have any. And they say, great, I'll introduce you to a lawyer and you can talk to them. And so you still need financial advisors, you still need lawyers, and you need to pay to put together the offering first, and then you go out to market and you hope you can fundraise. And I can tell you as a company founder, it's a bit nerve-wracking where you need to do this, all of this work, come up with a price, and then try and fundraise when ex ante you're not sure if you can or not. And once you go out with your offering, you really want to make sure that you can hit your target fundraising amount. Otherwise, it's not great. It is not a why not decision, as I call it. It really is something that you need to be committed to doing, and you really need to make sure it actually works. A lot of the issuers that we've been talking to, again, whether public or private markets, have said the same thing. I'm still trying to fundraise. I'm still trying to figure out how to put together my offering. I need to finish fundraising, which can be a lengthy process before I'm actually ready to generate the equity token, get listed, etc. And so with, like I said, we went back to the drawing board and tried to have a think about what can we do that has that original idea of companies fundraising and giving up a security right with a whole lot less complexity and paperwork. Very transparently, this is a very new project that we're undertaking. We're still trying to put together both the concept of how we see revenue tokens work. We're still sorting out some of the legal and operational aspects. And the reason why we wanted to do this AMA and get all of you potential issuers on the call today is because we are looking to select a number of pilot issuers, people for whom we said we will come and help you do this issuance for free. But in exchange, we will need you to work with us as part of this process, give us feedback in terms of the product design so that together we can create something that you, the issuer, actually need and want and meet your needs and also matches with the needs of potential investors. But the idea that we have around these revenue tokens is a couple of things. First, we have in mind creating these things as purely private market instruments. So these will be private placements and therefore only open to private and accredited investors, just purely to keep things simple so that you don't actually have to, for example, submit prospectuses to regulators. But most importantly, we think that Fusang will be able to fully intermediate that process. We will be creating these as investment contracts. So you, the company, will sell a percentage of your revenue. So let's say you'll say, you know what, I want to create these revenue tokens that represent 10% of my revenue rights. And the collective pool of investors, of token holders, will get every quarter distributions equal to 10% of your revenue. But those investment contracts relating to those revenue tokens, those will be created by Fusang as an entirely standardized contract. And so as a result, we don't think you, the issuer, will need to talk to lawyers or talk to any third-party intermediaries in terms of creating this contract in the first place. Fusang will help both create the contract. We will do all of the logistics and administration involved in terms of going out, helping process subscriptions from investors, helping get the tokens back to them. in terms of the investment layer. And then post issuance, we will also be in charge of actually monitoring the revenue of companies and making sure that gets paid out to investors. Again, Fusang will totally intermediate this as a platform. And so we think for the first time, actually be able to make these equity-like revenue tokens work, where in the past, again, securitization or companies signing these kind of investment contracts, this is not new, but historically it's always been done one-on-one between a company and investor or with a small group of investors. And again, you still need to involve lawyers, you still need to negotiate over contracts. It is not certainly not free, and it does take some time. Again, with our idea, and certainly for you guys as pilot issuers, Fusang will do this for free at no upfront cost, and we'll take a back-end cut of revenue. I'm going to pause there before I keep going, because I see that we already have a couple of questions, one of which is, what is the revenue amount required to get funded to issue a token? To be perfectly honest, part of us doing this pilot is we're trying to figure out for Fusang what makes sense commercially for us to actually go and do these revenue tokens. But for this pilot project, we will take issuers who have as low as $1 million a year in revenue. Looking to do, let's say, 10% of that revenue rights, and assuming you're selling that at a 10x multiple, which I'll explain how that works in a bit, that will look at being as little as $1 million raise. Which brings me to a very helpful other question I see here, which is whether the percentage of revenues paid out are fixed based on actual revenues at the point of issuance. Yes, so maybe to talk a bit about the actual design of the revenue token. Revenue-based financing has exploded in size and scale. There are a lot of companies out there who will lend against your future revenue. So if you're a SaaS company, you can sell your Q4 2020 revenue. You will sell it at a discount, and investors will buy this effectively as a fixed income instrument. So you might sell 100,000 worth of revenue and get $90,000 today. So the investor will get a fixed upside, and this is basically like a debt instrument. We have in mind something rather different. We will be creating these almost as equity-like instruments. I say that it's not actually going to be equity or company equity, but equity-like in the sense that these will represent an open-ended investment contract. So if you've decided to sell 10% of your revenue, you will forever owe 10% of your revenue to investors. And again, you will pay out a fixed percentage of that every quarter. Now, the benefit of having it structured in this way versus debt is that debt introduces stress for companies. You need to make sure that every quarter you meet your coupon payments, and at the end of the term, you can actually repay the principal. But life and running a company has many vagaries. And who knows how the world is going to look like in 12 months' time. That's always been the benefit of equity versus debt. And likewise, with these revenue tokens, if you owe 10% of revenue, then whatever your revenue happens to be for that particular quarter, that's what you'll pay out. If your revenue is high, you'll pay more. If in the unfortunate event that your revenue is lower, you will pay less. So there's no bankruptcy risk, if you will, as an issuer. It's much more like equity in the sense that investors are aligned with you. If your company does well, they'll make more. If not, they will make less. It's almost a bit like an instrument that's yield paying with an equity kicker, if you can think about it this way. So if you've sold 10% of your revenue rights at a 10x multiple, so let's say that you are doing $1 million in revenue, 10% of that, that's 100,000. But you decide to sell it today at a 10x multiple, so you're raising $1 million total, then every quarter, assuming your revenue doesn't change, you will owe 10%, right? So you'll be paying out $100,000. And on conversely, to investors, that means that they'll be making an implied yield of 10%. But if your revenue doubles next year, not only will the payout on a quarterly basis double, but the implied value of that token should theoretically double as well. So it's a bit more equity-like in that sense with those fixed distributions. Let me just see it. I see a guy who's raising his hand. I'm going to come to you in just a second. I'm going to answer another question first while my team can get ready to pull you onto camera. Sorry, let me just read this. You affect the placement we done by the issuer. It's a great question in terms of asking about placements and distribution. The Fusang, and again, this is something that very transparently we're working on in terms of the operational design right now, is why we're running this as a pilot program. But our current plan is that we will run an open architecture platform. What we mean by that is the whole idea behind us creating these revenue tokens is to create something that is radically simpler than selling company equity. Nothing wrong with companies choosing to issue and raise equity. We, Fusang, have digitized all our own equity. We're selling our equity tokens as part of this IPO process. But we recognize that, number one, it's not for all issuers. And number two, it's also only one part of the cap stack, if you will. So whatever you as a company startup are choosing to do vis-a-vis your equity, there's no reason why you can't quite separately also look at effectively securitizing and selling part of your revenue. And one of the benefits of doing so is that it has nothing to do directly with your equity cap table. So whatever control rights you have or any kind of special structuring going on, you can leave that be and quite separately look at how you can sell out the revenue. And as I said, Fusang would look at doing this for free, look at doing all the intermediary paperwork for creating these tokens and running the logistics of the platform for allowing investors to easily buy these tokens, and then doing the post-issuance monitoring, making sure payments are paid out to investors, etc. That said, it is not our primary job to act as an investment bank or a financial advisor. It will not be our job to go out and knock on doors and try and help you fundraise the way a placement agent or a bank would. Now, it obviously behoves us to make sure that if you guys come on board as one of these pilot issuers, that you guys are a success. We'll do whatever we can to deploy our networks to make sure that you can make these issuances a success. But we want issuers to be very conscious of the fact that it's really not our job to help you fundraise per se in terms of knocking on doors. What we will do is put you in touch with our distribution network for people who very much do that for a living. And again, we can talk about some of the other partners we're looking to work with, not just on the fundraising and distribution side, but in terms of marketing, structuring, advisory, etc., and how we can see all of that being put together. But again, our idea is to create something a little more akin to being the Amazon of investing, where you can come to us with your company. We can make it super simple as a process, and we handle all of the logistics and fulfillment in between. And one of my team, Paul, the kind guy who's raised his hands, and see if we can try and do this live. Amazing. Can we spotlight him as well so everybody can see him? Hello, sir. How are you? Can you hear me okay? Just see if I can start this. Oops. Oh, there we go. Hello, sir. How are you?
Hello, well, thank you.
Hello.
So I have a hi. So I have a question. Question slash comment. So you said that as your revenue increases, so you're taking a percentage of those revenues, but does that not then kill the potential of any second offering? Because my understanding of the email that was sent, and I've subsequently done a lot of reading, was it would be on a fixed basis. So let me be specific. We're a fast growing company. Okay, so we assume our initial placement will be $1 million US. Okay, now each time we fundraise, we basically use the money to buy inventory. The inventory generates quite a healthy return. So the more, basically, we need to keep on raising money to increase our revenue base. So the question then becomes this: if that's our business model, if we raise $1 million today, and that money then generates additional income for us, if the percentage of if the original investor, so let's say we raise $1 million, and now that investor's return is assuming at 10%, their return is now going from $100,000 a year. Yeah. Now we've increased our revenue to $1.5 million. So now, if their return now goes to 150,000.
Yes, exactly. So the percentage is fixed, but obviously the amount will be variable. That's what I mean by it's a little more like an equity instrument, if that makes sense. The flip side of that is that we think you could get potentially some rather healthy multiples. I don't know if you can still hear me. I think the video might be frozen. But if you can hear me, again, the benefit of having this as an equity-like instrument, and I use that term cautiously, is that what exact multiples that issuers will be able to get, we're not exactly sure, but we're pretty confident it will be somewhere north of at least 10x. Because if you think about it in the reverse way, a 10x multiple on revenue implies a 10% yield to investors. And a 10% yield plus that equity kicker like upside sounds awfully attractive in today's zero rate environment. Now, what exact multiples this will end up being, honestly, I don't know. But one of the benefits of running this as revenue as opposed to equity is we don't see any reason why you can't create an issuance and try to get an open market price. Meaning, rather than trying to sell 10% of your revenue, you could say, you know what, I want to try and sell 1% of my revenue, let it get listed, traded in the open market, and then see what the actual open market value is. If the multiple is lower than I hoped, then leave it or buy it back. If the multiple is higher than you hoped, then you can continue to issue almost out of treasury, if you will, into that market. I don't know if you can still hear me, sir, but otherwise, feel free to just keep typing if that question doesn't necessarily make sense. Oh, I see a message from my team saying I think he's dropped off the call. Let me go through some of these questions real quick because I see a flood. Great to see how much interest there is. Can this be used by special purpose vehicles? Yes, it absolutely can be. And part of the reason why I'm so interested in not only creating revenue tokens, but having this be linked as an investment contract versus, let's say, company shares where you do need an SPV, is that in theory, these tokens can be issued on very granular investments. They could be done company by company. In theory, it could even be done project by project. Obviously, the more granular they are, it may be harder and harder to go out and get investors. The issue so far with creating tokenized investment contracts, and why in the past I have been a bit skeptical of other people actually doing this, is that number one, you need to have a standardized form. So unlike company shares, where in almost every country in the world, including Iran, there's a Companies Act, and there are all kinds of built-in statutory rights, obligations, investor protections, etc. for company shares. These things do not exist for contracts. Contracts are variable, they're flexible, and you need to read within the four corners of a contract to see what you're getting. And that's why in the past we said, oh, not sure if you can, it's not quite the same as doing a full-fledged IPO. But what Fusang is looking to do, as I said, is to build a single platform where we, as the stock exchange, act as the self-regulatory organization, and we help intermediate that process. So number one, standardizing the contracts, and number two, actually monitoring performance of that contract. So monitoring what the issuer's revenue is, monitoring to make sure that the revenue actually gets paid out, and most importantly, making sure that if in the unfortunate event you wake up one morning and just decide not to pay, that we will help investors enforce that contract upon you. Because like any contract, if someone decides not to follow it, someone somewhere needs to enforce it. And the reality is it is very difficult for individual investors to do. And we think that we're perfectly placed to play that enforcement role as the stock exchange. Oh, I see you popped up, but then disappeared again. See if we can get him back. Brilliant. Real quick, let me go through some of the other questions. I have a question around timelines for submission. So we're looking at signing up pilot issuers. We're looking to draw together a group of 5 people for this initial batch. And Fusang commitment is we'll do this process for free. We'll take a percentage on the back end in terms of funds raised. But in exchange, we expect that issuers will do 2 things. You'll understand that you need to work with us in terms of coming up with the design of this product, right? We've got very specific ideas of how to design this, but we want to make sure that this is something that actually suits your needs as an issuer. And number 2, we expect that you'll give us open and honest feedback through this process. Hello, we've got you back, sir. How are you?
Sorry, I'm very well, thank you. So my power cut out and I lost my Wi-Fi connection.
No problem.
So I'll try to repeat what I'm saying in terms of designing the product. So I think my view is I think the design being proposed is actually wrong.
Mhm.
Don't think it's the best design. I think that what should happen is I'll use our company as an example.
Yeah.
If we're continually growing our revenues year over year over year, if the return that's going to the original investor
Yeah.
is going up year over year over year, it means that we can no longer raise any further money. We can only raise money once.
Mhm.
Because if we've pledged 10% of our revenues to investor X
Yes.
into perpetuity,
Yes.
then that means that if our revenues are $1 million a year today,
Mhm.
in 10 years' time, if they were $100 million a year,
Yeah.
that investor is now getting $10 million a year. But more importantly than that, it has taken away our ability to do any secondary sales of revenue tokens because we're not prepared to, we can't sell more than 10% of our revenues.
Absolutely.
So in terms of a suggestion,
Mhm.
my proposition and my suggestion would be that the 10% that the investor is earning should be fixed based on the revenue at the point of issuance.
Mhm.
So let's use the $1 million example again.
Yeah.
The company's making $1 million a year in revenues. The investor buys a token, 10%, that's $100,000 a year.
Mhm.
There should be a back-end cap. So if the revenues of the company falls below $1 million, well, that investor still gets 100,000. So their 10% return is fixed. But there shouldn't be further, the further upside should only come in the value of the token that they're basically holding. Yes. So you can buy the tokens out. But let's say the revenue is now doubled to $2 million. Mm-hmm. That should allow the company to now be able to sell another $1 million worth of tokens, mm-hmm. to now still maintain the 10% ratio. Mm-hmm. If the 10% is fixed and goes perpetually, it means that no company will ever be able to sell more than once. Mm-hmm. So I think that's a design flaw.
No, absolutely. Thank you. That's very interesting. So I think a lot of companies do something very similar to what you're mentioning, as I said, in terms of selling it more as like a debt-like instrument. And in many cases, it's very fixed, right? So you'll say, I want to sell Q4 revenue next year again, and I'll sell that at a discount so I can get cash today. And a lot of people are out there doing that, not always in terms of a tokenized form or an open market tradable instrument, but there's a fairly active market of people looking to invest directly into debt secured by revenue, let's call it that. The reason why I've always been interested in a more like an equity-like instrument is precisely because the valuations of those tokens potentially are substantively higher. But you're 100% right. Depending on your business model, and most importantly, depending on what your net margins are, there's going to be an ultimate tolerance point beyond which it just doesn't make any sense for you to sell past that certain portion of revenue. And I definitely don't think that this will make sense for a lot of kinds of businesses as a result. And that's why I think there's always going to be room for selling debt. There's going to be room for selling equity, for example. I think what we had in mind in terms of this revenue token is especially for companies that have very high net margins, high growth, SaaS companies who say, you know what, my marginal cost of serving a new customer is functionally zero. So if I could pull forward almost revenue from tomorrow to today and use that to grow even faster, that's worth it for some portion of revenue. Certainly you can't sell big chunks, right? You can't sell all of your revenue. But what I think is potentially interesting about doing this as an open-ended instrument is that, as I said, you don't have to do 10%, right? You could do 1% and see what that open market price is. It could be lower than you hoped. It could be a lot higher than you hoped. Where exactly valuations will end up, I'll be honest, I don't know, right? This is a very new instrument. But if you just think about it in the reverse, for what people are willing to pay for yield these days, I suspect that you can get multiples that are actually fairly healthy. I'll give you a quick analogy. So if you look at NASDAQ, average PE multiples are something like 35x. Now that's a multiple on a cash flow stream, and that's bottom of the cap stack cash flow. In theory, given that revenue is not only top of the cap stack but it's also a bit more, I wouldn't say guaranteed, but it's a bit safer in the sense that you need to pay this out every quarter no matter what, as opposed to a company being able to decide when it wants to issue dividends. In theory, there's no reason why multiples shouldn't look pretty similar. Again, where multiples will end up, I don't honestly know. Something that we need to figure out. But thank you very much for your feedback, and something for us to think about in terms of whether we would want to look at issuing multiple types of tokens. So in addition to this kind of open-ended equity-like token, would love to explore with yourself, sir, in terms of a token with more debt-like features, if that makes sense. So thank you very much. And I will get one of my team to follow up with you because I'd love to learn more about that idea. We're running already way over, and I'm happy to just keep on talking, and people can feel free to stay on for as long as we have time, because I also see a lot of questions in the other Q&A panel. Just to take a couple more questions around how does a revenue token relate to being a derivative? So how this would be classified legally in a lot of countries, we'll need to see. It usually wouldn't be classified as a derivative in the sense that it doesn't derive its price from another instrument. It's not like an equity-linked derivative, for example. I would best describe it as definitely a security, but as an investment contract, meaning that issuer and investor are signing a contract that gives you certain rights. And as I said in the past, the issue with doing that is a lack of standardization and a lack of enforcement. And we're hoping that our platform will solve both of those things. Relating to that, though, in terms of where would a revenue token rank in terms of seniority, how does that relate to a digital preference share? When you think about the cap stack of a company, and this is really the entire reason why we're looking at revenue right now, when you buy equity in a company, it's bottom of the cap stack. Now, in theory, the value of an equity should be the infinite future stream of cash flows discounted to today. Now, whether or not a company will pay out cash flows or ever have dividends, that's a whole other question. But that potentiality is supposed to be what equity is valued at. And so therefore, in order to put a price on equity at the bottom of the cap stack, you need to analyze everything in a company. You need to look at its top line revenue potential. You need to look at its management team. Do you think it can translate that top line into bottom line? Does it have looming debt hidden on its balance sheet, and on and on? And this is exactly why when you're looking to go through an IPO process for a company, you need to look through all of these different dimensions and make sure that you can report these things to end investors so they really know what they're getting themselves into. Revenue is the complete opposite. It's the very, very top of the cap stack. And in theory, because every dollar that comes in, part of that will go straight out to investors. At least for the investors, it is much simpler in terms of analysis. They do not directly need to worry about, can you translate top line into bottom line? Because it doesn't really matter for them, right? They're getting money straight off the top. It means that they can keep the analyses much simpler. And as a result, in terms of what it will take for you, the issuer, to create these things, the kind of information that you need to publish, we think we can keep it substantially simpler than if you were looking to sell company shares. In many ways, it is kind of similar in terms of a pref share in concept. You can think of it as the most preferred pref share, in that I would describe it as being almost like the very top of the cap stack. Again, whenever a dollar comes in, part of that will need to be paid out to investors before anything else: operating costs, debt payments, etc. Certainly equity holders. That said, in the event of a company going bankrupt, that bondholders in theory should be able to claim some residual value from the company, versus if you just have the rights to revenue and there's no more revenue, your token will be worthless. That said, how many companies in today's world really have residual value when they go bankrupt? Certainly, if you're a tech company or a startup, the honest truth is, if your revenue is zero, chances are, if you're a debt or a equity holder, you're not getting anything anyway, right off that investment. So even though talk about seniority is a slightly different concept, I would argue that it's certainly simpler and in some ways a lot less risky for investors to buy revenue straight off the top, as long as they have some degree of confidence in terms of projecting what that revenue stream will be, and in terms of that revenue actually perpetuating in future, if that makes sense. I'd love to hear if that explanation makes sense to you. I guess another broad question around, can you game revenue as an issuer? So how does, how do you relate past track record to future performance, and can you manipulate these things as an issuer? I think is a natural follow-on question, to which the answer is you can always manipulate numbers on any company's financial statement. I honestly think that revenue is harder to manipulate than profit. Profit is inherently movable. And as an old finance teacher once told me, you can't eat profit, you can only eat cash. And at least revenue is fairly observable. And again, we can talk in future about how Fusang plans to help monitor some of these things. And it's just a little harder to fake in the sense that it really does need to be cash coming into the company ultimately. And in terms of maybe relating to that, actually, question around, can you sell revenues in advance? Yes, you absolutely can sell revenues in advance, at least conceptually. So that, again, the idea we had behind doing this as an open-ended revenue token, as opposed to a debt-like, fixed term, fixed interest rate instrument, is that you're free to sell that token at whatever multiple you want, and free to tell whatever story you have in terms of your future revenue potential. And the question will be whether or not investors are actually willing to accept that story. Ultimately, this will all come down to one single number, which is the multiple that they will apply to your revenue. So if you said, I make $1 million in revenue this year, and I want to sell 10% of revenue at a 10x multiple, right? Those are the only variables you need to know. Or do I think I can sell it at a 20x multiple because I actually think that my numbers are going to go up so much, I'm such a high growth company. And if the investor said, well, 20x multiple, that implies a 5% yield. Hey, if I can buy into your startup, get a 5% yield, and also get capital appreciation of the token, I'm in. So again, this will all come down to multiples that you think you could sell the token at to investors. But the benefit of doing this as a revenue token versus as equity is you can almost try as you go. As I said, there's no reason why you need to do all of this all at once. You can do this for 1% of your revenue, get it listed and traded on the Fusang platform, get an open market price for it first, see what those multiples are, and then decide how you want to go from there as a company. You could cancel it, buy it back, or decide that you want to start issuing more and more revenue tokens because actually the multiples are much higher than you had initially hoped. Talking a bit about investment banking costs, talking about fee structures, and I think that will nicely lead me into talking a bit about the actual mechanics of how we're looking to make this revenue token work. As I said, this will end up being an investment contract between you, the issuer, the company looking to raise money, and the end investors. But Fusang will be creating a third board, a third marketplace on the stock exchange that we're prospectively calling the revenue token market. And we're creating this as a separate board so that we can have customized rules just for these revenue instruments. We will only be looking to take issuers who are willing to use our standardized investment contracts, so that way you as the issuer, you don't need to worry about paying lawyers or paying hugely expensive deal structuring fees. And likewise, investors don't need to go out and hire lawyers to go and read these contracts because they will know that these are all standardized templates. Again, the only number that you'll need to decide as the issuer is how much of my revenue am I willing to sell or try and sell up to as a cap, and what multiple do I want to apply to those revenue rights. You will not need to go out and sort out your own contracting and etc. And certainly for this first pilot issuance program, for these first 5 issues we're looking to do, Fusang is planning to do this for free upfront, and we'll take a cut of the back-end raise. We will, as a stock exchange, be responsible for monitoring that market. So we'll be helping to create these instruments, but on a quarter-by-quarter basis, we will need to verify what your revenue is, and then we will help sort out the logistics of getting those payments into the hands of end investors. And yes, in the event that you wake up one morning and say, I promised to pay 10% of my revenue, and I'm just not, we will be responsible for identifying breach and enforcing those contracts on behalf of investors, right? And that's the job that we will play in exchange for hopefully getting lots of these products on exchange, because ultimately our business model is to get trading fees more than anything else. Let me just see. Sorry, I've got a lot of questions hiding in all kinds of different windows that people are submitting. I'd love to have a live question for a change if someone wants to raise their hand and come chat. But again, to me, the most interesting part of doing revenue is something a little different from equity is that you just don't have to do it all at once. And honestly, in the unfortunate event that you were to create a revenue token and not a soul was willing to come and buy it, you can just cancel it. Right. Fusang, as I said, we're doing this for no upfront fee. So there's really no cost or no risk to you as an issuer. And likewise, let's say you wanted to sell 10% of your revenue rights and maybe you only sold 5%, you still got to raise money with no upfront fee. You can still get that listed and traded, get an open market price for your revenue and go from there. And in addition to getting a price on your revenue, if you are looking to do an equity raise, for example, I think that can actually be quite beneficial to having an open market price applied to your revenue. Certainly, if you are a startup, let's face it, a lot of startups in today's world are not profitable anyway, and you're being implicitly valued at a multiple of your revenue already. And I think my guess is that multiples on this will actually be a lot higher than most people expect in a zero yield environment. And I think that that will look very good in terms of doing other kinds of fundraising, equity, debt, etc. What are the projected back-end fees? I'll be honest, this is something that we're still sorting out in terms of looking at the size of raises that we're doing. They said certainly for these pilots, we didn't really want to set a minimum cap because very transparently, we're looking to do these as an initial run and initial test. So that's why we said we're willing to take very small projects. But right now we're looking at taking a 10% cut of the raise amount. We said we'll do this with no upfront fee, and whatever you happen to raise, we'll take part of that. If you don't raise a dime, then Fusang will charge 0. And quick question around, can you tokenize a fund? Well, Fusang can definitely create fund tokens in terms of actually owning shares in the fund quite separately. If you're interested, love to have a chat with you about doing either public or a private listing for that fund. But in addition, if you wanted to look at actually selling revenue or similar rights for a fund, I think that's something that we could explore as well, but need to look at in terms of the actual deal structure. I suspect the companies for whom revenue tokens will make the most sense are companies that have existing revenue, for one, always helps, can show stable, predictable, and growth in their revenue. Is going to make it much easier in terms of looking for investors, and also companies that are, let's call them not traditional business companies, right? So if you run a company where you've got, let's say you're a restaurant in Hong Kong and you've got a 6% gross, a net margin, that's probably not the right kind of company in terms of selling your revenue, because that will eat into your margins too much. But if you're a high growth tech startup, a SaaS company, and you say, I've got 40% net margins, then I think that could be very, very interesting. And as I said, to me, the most interesting thing about revenue is that we can do this in a very light touch way. Equity comes with shareholders, with information and control rights and all kinds of other things. And we think we can help cut through a lot of that complexity. Let me see in a couple of minutes, because we're running way over. What other interesting information can we talk about? Well, maybe just two final things to talk about. The first is that, we hear a lot of people in the crypto and token space say, oh, I don't want to issue a security because I like utility tokens for the ability to create community, for the ability to create these alternate value networks that create non-financial reasons for people to want to buy tokens. I think that's all very interesting, very true. I also don't see any reason why you can't layer some of these benefits on top of the security. Fusang's belief has always been that securities exist for a reason, and investors want to know that they have legal and contractual rights when they're putting their hard and life savings into an investment. And you can still take these tokens, these security tokens, and layer all the same utility benefits that you'd be interested in layering on top of them. A lot of people who issue ICOs are perpetually trying to find ways of convincing investors to stake tokens to generate value. With something like a revenue token, you don't need to worry about that at all. Investors are going to want to hold it because every single quarter they're going to be paid out of cash flow. And if you can both create this as a revenue token and layer utility benefits on top, I think you've got something very, very interesting. As I said, very transparently, this is a very new idea. Creating these equity-like instruments in terms of revenue tokens, getting it listed and tradable in tokenized form is something that not a lot of people have really explored before. There are a lot of pieces that we, Fusang, are in the process of figuring out now, very honestly, and that's why we're looking to sign up this initial group of pilot issuers. We, out of the 5, have already signed LOIs with 2 people, I believe. You can correct me. So yeah, we're keenly looking to get a couple more issuers to come along with the journey with us. As I said, what we will ask in exchange doing this for no upfront cost is that you give us feedback on the process and you help us test our ideas, make sure that these products that we're designing really fit for purpose, both for you as the issuer and also for prospective investors. If any of you have questions, if someone can throw up maybe an email address that people can get in touch with, whether you're interested in this pilot or not, love to hear your feedback. Let us know what your ideas are. Let us know if you think we're making a tragic mistake in terms of our product design. I'd be very keen to hear from all of you. I see an email address there. You can just email business@fusang.co. And maybe just one last question, again, because I see a question from Uvi about how a company could sell additional revenue tokens. You will, right, in our current design, need to give up a larger percentage if you want to sell new tokens out of treasury, right? That's the current design that we're going with. But as I said, you don't necessarily need to sell this all at once. You could start by selling 1% of your revenue, getting an open market price for that, and then going from there, right? Maybe selling 1% a year or etc. But yes, I 100% agree that there'll be a natural cap in terms of how much you want to sell. And I don't think that revenue is going to replace equity or debt or etc. as a fundraising mechanism anytime soon. I see this as something quite additional to all of that. That to me, the interesting thing about selling something like a revenue token will be if you have a new company or a new project and you maybe already are making revenue, or you think that you can just tell a very compelling story to investors about why you're making revenue, the ability to sell that with no upfront fees without having to go talk to lawyers, I think will be interesting to a lot of businesses. And I actually think that if you're a company and you're looking to try and build stakeholder engagement, if you want to try and get your own customers to invest into you, something like revenue is quite interesting just because it's a bit easier to understand. I'll give you an example just to close. I think Deliveroo is a very interesting company. When I look at my credit card statement every month, half the line items are Deliveroo, Deliveroo, Deliveroo. Now, would I buy the equity? I honestly don't know. I would have to do quite a lot of homework in terms of deciding whether or not I think that would make sense, whether they will ever be able to turn a profit, what their unit economics look like, and on and on. But if Deliveroo came to me and said, hey, Henry, we're selling our tokens at a 20x revenue multiple, so that will give you an implied 5% cash yield every year. And I said, well, is Deliveroo growing? I think so. I certainly contribute directly to the top line of Deliveroo. I have no visibility into how they translate that top line to bottom line, but at least I can view the top line. I get a 5% yield from Deliveroo. That's a downside better than me buying a bunch of government bonds. And if the revenue grows, as I probably think it will, I get capital appreciation in the token. That's interesting. Now, especially if they could say, hey, buy some of my revenue tokens and get a Deliveroo subscription instead of having to pay every month. All these kind of things, I think, start to become quite interesting for me as a customer, as a radically different value proposition than buying a bunch of government bonds. Just a simpler way to turn some of your company stakeholders into people who actually own part of the value of your company. Again, as I said, these are new concepts that we're playing around with. These are very novel things that we're trying to innovate on. As I said, that's why we're running this as a pilot program. If any of you are interested, let us know. As I said, we already have, I see some more messages from people. But unfortunately, I think we're running out of time today because I appreciate we've kept people quite a while. As I said, if you have questions or you're just interested in becoming part of this pilot, please do email my team at that email address, business@fusang.co, and we can get talking and we can see where we go from here. Anyway, like I said, I know there's been a lot of other questions, but we're already running way over. If you wouldn't mind, if you have a question that you didn't think was answered, email that address. We'd love to chat to you further and hope to talk to all of you soon. Anyway, thank you, everybody. Take care.